Hi, I'm Kep Kepner, CPA here in Dallas. We're talking a little bit about construction bonds. Here in Dallas, construction is going really well, and it's going well around the country. One thing's for certain, all those big jobs that you see, those aren't being performed by contractors that don't have bonds. A bond is a guarantee by a bonding company or surety company that you will complete your work. Now, there are a lot of different kinds of bonds. One kind is called a bid bond. So sometimes if you want to bid on a job, you have to put up a $25,000 bid bond. Wow, and you might not even get the job. Well, from the owner's standpoint and from the bonding company's standpoint, if you can't even get a bid bond, why should they bother to look at your bid? Because you may not be able to perform, and then they're going to be stuck having to finish the job. The bonding company on a contract bond or construction bond would need to then pay up to let somebody else finish your job. So one of those kinds of bonds is a bid bond. There's a performance bond or construction bond. That's going to guarantee that you're going to finish the job. There are payment bonds, so that if you are working for a general contractor and the general contractor goes bankrupt, how are you going to get paid? Well, a bonding company with a payment bond can step in and pay to get that work completed. And generally, that would be completed by the people working on the project. There are material bonds to make certain that if a supplier says, I can deliver a certain kind of material, then if they don't, then the money is there to get those supplies from somebody else. So there are all kinds of bonds that relate to performance. And so if you're a contractor and you want to do bigger jobs, those bigger jobs are going to probably require a bond. So you can then go out and get that bond if you qualify, and you can then qualify to do bigger jobs. There's an act called the Miller Act in the Federal Miller Act. There's also what are called Little Miller Acts at the state level. But that Miller Act says that if you're doing a job that's over $100,000 for Uncle Sam, you must have a bond. So if you're content doing small jobs for individuals, then that's okay. Nothing wrong with that. But if you want to grow your company and do bigger jobs, then you're going to need bonding. And to need bonding, you need good financial results. So we can help you in that area. If you need help putting your accounting in shape, showing your financial data in the proper manner, then give us a call because we can help you. Thanks.